Okay, let's jump right into this. If you run an e-commerce business, you know that making the sale is really only half the battle. The other half? Well, that's the part that can quietly drain your time and completely eat up your profit margins. I'm talking about the accounting. Today, we're clearing up the massive amount of confusion out there around e-commerce accounting automation. We're going to break down the exact tools you need to stop pulling your hair out over mismatched bank deposits, put down those messy, complicated spreadsheets, and actually get your books perfectly synced and totally stress-free.
Here's our roadmap for this explainer. 1. The e-commerce bookkeeping mess. 2. Highway versus city streets. 3. A2X and Synder compared. 4. PayTraQer's flexible middle ground. 5. Webgility for operational heavyweights. And 6. How to choose your tool.
Section 1. The e-commerce bookkeeping mess.
So, why doesn't your bank deposit match your Shopify sales? I mean, picture this. You're staring at your dashboard. You had exactly $10,000 in gross sales yesterday. You're thrilled. But then, you look at your bank account a couple days later, and the deposit from Shopify Payments is for $9,420.50. You just sit there staring at the screen, trying to figure out where on earth that specific number came from, trying to manually map it back to your gross sales. It's incredibly frustrating, right?
The reason they don't match is because that single bank deposit isn't just one thing. It's actually a chaotic, tangled web of competing data. That $9,400 payout, that's your $10,000 in gross sales, minus maybe $250 in refunds, minus $329 in platform processing fees, plus the taxes you collected, minus shipping labels. You get the idea. It's a complete mess. And if you try to untangle this whole shebang by hand, matching every single order, fee, and refund one by one in a spreadsheet, it isn't just incredibly slow, it's practically a guaranteed recipe for margin-wrecking errors. Literally one small typo, and your books are completely thrown off.
Section 2. Highway versus city streets.
Think about syncing your data in two totally different ways. It's kind of like driving. On one hand, you have the highway approach. This is summary posting. It's fast, it's clean, and it basically bundles all your daily sales, fees, and refunds into one neat entry that perfectly matches your bank deposit. Now, you do lose a bit of that granular per-order detail, but you get incredible speed. On the other hand, you have the city streets approach. This is itemized posting. It records absolutely every single transaction individually. You get maximum detail, which is great if you need to track individual customer accounts. But it brings a massive risk. It can easily create a massive traffic jam in your accounting software, bogging the whole system down.
If you take that highway approach, you rely on something called a summary journal entry. Basically, this is a single accounting entry per payout that perfectly mirrors your net bank deposit. So instead of posting hundreds of individual sales to your ledger, the software does the heavy lifting. It calculates the exact math of that deposit, maps the fees to your expense accounts, puts the sales in your revenue accounts, and posts just one single line. What used to be an hour-long, super frustrating matching exercise, it turns into a clean 5-minute reconciliation at the end of the month. It's a real game changer.
Section 3. A2X and Synder compared.
Let's break down two of the biggest tools out there representing these philosophies. A2X is the ultimate champion of the highway method. It uses that summary journal entry model we just talked about, and it's heavily favored for accrual-based accounting where you just want incredibly clean, fast reconciliation against your bank payouts. And it starts around $19 a month for smaller volumes. Synder, though, is built for the city streets. It gives you per-transaction itemized syncing. This makes Synder a great fit if you're running cash-basis books or if you have a B2B store where you desperately need strict per-customer detail for invoicing. But because it processes way more data, it comes at a higher starting price of around $65 a month. Now, this is where the philosophy literally hits reality. If you process 1,000 orders in a month, A2X bundles those into payouts, generating roughly 30 lines in your general ledger. 30. It keeps your QuickBooks file light, nimble, and fast. Synder, since it's syncing every order, fee, and refund separately, generates around 2,500 lines in your general ledger for those exact same 1,000 orders. That itemized syncing is definitely powerful, but you can see how quickly it can bloat and clog up a QuickBooks file, right? If you start doing serious volume, it can slow the software to an absolute crawl.
So the crucial point here is understanding your total cost of ownership. And that brings us to a rather surprising number, $5,220. This is the estimated annualized cost of running Synder for a growing store, compared to just about $1,100 for A2X. Why such a massive gap? Well, because while Synder's monthly sticker price is higher to begin with, the true cost absolutely explodes when you factor in labor. If that high-traffic city-street approach creates duplicate transactions or sync errors, you are suddenly paying a bookkeeper $50 an hour for 3 or 4 extra hours every single month just to clean up the mess. You always have to factor in the cost of reconciliation labor, not just the software subscription.
Section 4. PayTraQer's flexible middle ground.
Now, there's a third tool that aims to blend the best of both worlds. PayTraQer's whole vibe is summed up perfectly by this quote from our sources. The tool actually adapts to your business instead of forcing your business to adapt to the tool. Unlike A2X, which only does summary, or Synder, which leans heavily into itemized, PayTraQer is built entirely on the concept of giving the merchant total choice. In practice, this means you can actually start out on the highway. You use a clean summary sync when your business is a bit smaller or when you just want really simple books. But let's say you launch a B2B wholesale wing, and suddenly you actually need that granular customer detail. With PayTraQer, you can seamlessly switch your settings over to itemized detail as you grow, without having to rip out your software and start totally from scratch. And through it all, it gives you deep control over your payout settings, moving money cleanly from your payment gateway clearing accounts straight into your real bank accounts, so your bank feeds still match up perfectly.
Oh, and there's another feature here that I think is an absolute lifesaver. PayTraQer includes a native undo button. If you've ever messed up an account mapping, and let's be honest, anyone who has ever touched QuickBooks has done this, you know the absolute panic of syncing thousands of wrong entries. The native undo button lets you click once and instantly roll back all that sync data without corrupting your core accounting records. It completely removes the fear of making a costly mapping mistake and lets you experiment with your setup confidently.
Section 5. Webgility for operational heavyweights.
Now, if we look at a fourth contender and contrast PayTraQer directly with Webgility, you see a clear divergence in purpose. PayTraQer is what we'd call an accounting-first tool. Its primary mission is clean reconciliation, making sure your sales, fees, and deposits match perfectly. Webgility, however, it's operations first. It's a massive beast of a platform. Yes, it handles accounting, but it's really built for businesses that also need to manage complex physical inventory movement, create purchase orders, manage shipping labels, and coordinate multiple store channels, all from one central hub. If you just need clean books, Webgility is total overkill. But if you've got heavy, complex operations, it's an absolute powerhouse.
Section 6. How to choose your tool. The experts from our sources have boiled this all down to a super simple, highly effective 4-question checklist to help you choose. Number 1. What's your accounting system? These tools act very differently depending on if you're on QuickBooks Online, Xero, or a massive ERP like NetSuite. Number 2. Where is your data coming from? Are you purely Shopify, or are you pulling from Stripe, Square, and Amazon too? Number 3. How much detail is actually needed? Be honest with yourself here. Do you just want the clean highway, or do you truly need the city-street itemization? And number 4. What is your operational scope? Do you just need a reconciliation tool, or do you need a full back-office operations manager? Answering these 4 questions will point you to the exact right software for your unique situation.
Which leaves us with one final thought to reflect on today. Take a hard look at how you are managing your finances right now, and ask yourself, is your current accounting tool, or maybe your manual spreadsheet process, forcing you into a corner? Or is it giving you the choice, the flexibility, and the safety net to run your books exactly your way? Because at the end of the day, gaining true control over your numbers is the first real step to scaling your business. Thanks for joining me on this explainer, and I hope you're walking away feeling empowered to take total control of your e-commerce accounting.